Go over some earnings that came out today, what to expect for tomorrow for earnings. We're also going to talk about what Jamie Dimon, the CEO of JP Morgan Chase, the largest bank in the United States, had to say today about his predictions for where the economy is going to go. And then later in the video, we're going to go over your stock picks, and I will do technical analysis on your stocks. So be thinking about what stocks you guys want to talk about later in the video. For now, let's get into the market news, and then we will get to your stock picks. And if you guys could just let me know if you can hear me okay, I'd really appreciate it. Okay, let's start with our market news. Let me get this set up over here. Oops. All right, good enough. So, let's see. There we go. Got to figure all this stuff out. There we go. Okay. So the first thing we got to talk about is the JP Morgan Chase earnings. Now, this is what everybody was really, really looking forward to and trying to figure out, like, okay, what's going to happen? Because earnings season kicked off today, and it all starts with JP Morgan earnings. This was the big one. This literally kickstarts earnings season. And unfortunately, it was good, but it was also bad. So here's the thing. The estimate was for JP Morgan to earn $2.69 per share. They actually ended up earning $2.76 per share. They were estimated to have revenue at $30 or $30.86 billion, and they actually came in at $31.59 billion. Now, that seems great. That seems like, wow, that's amazing. Great job for JP Morgan. They beat earnings. That must be why the market skyrocketed. And yes, to an extent, that was part of it. But if you go back to the pre-markets, you'll actually notice that JP Morgan was actually down 3% pre-market. Now, why would they drop if they beat earnings expectations? It doesn't really seem to make a lot of sense if you are just reading the headline story here. And what you have to understand is just because a bank or any company for that matter beats earnings does not mean that earnings were good. They may have beat the earnings expectations, but their earnings were still really bad. So in other words, they were expected to have extremely bad earnings, and they only had really bad earnings. So let's get into the actual numbers and see kind of what happened here. So if we take a look at this, coming on down, you're going to see that here's where it starts. Okay, the initial numbers, cool. But then you read profit fell 42% from a year earlier. Wow. So profit fell 42% from a year earlier. That is not good. So why? Why was profit down 42% year over year? Well, and then of course revenue was down 5% on top of that. So what it ended up being, and like I said, the shares dropped 3.2% initially, reaching a new 52-week low. So much for banks being good when interest rates are rising. So what ended up happening was essentially this guy right here. JP Morgan took a $902 million charge for building credit reserves for, read this, anticipated loan losses. Now, a year ago, they released $5.2 billion in anticipated loan losses. So a year ago, they were saying, we're not going to have any loan losses. We have $5.2 billion in reserves set aside for loan losses that we know are not going to happen. Let's just go ahead and get rid of this $5 billion. This year, this quarter, they're saying, okay, loan losses are about to get bad. Rather than releasing $5 billion, let's go ahead and add almost $1 billion. So that's what happened. Now, the big thing that jumped out at me is, okay, why are they so concerned about these anticipated loan losses? And Jamie Dimon kind of get into some of that, and he explains it. And of course, also part of this was just the Ukraine war, and there's kind of a one-time write-off there as well. Now, it says the bank also booked $524 million in losses due to markdowns from the Russian invasion of its neighbor. Come on, call it the Ukraine war. Call it what it is. Anyway, that's sort of what's happening there. So what did Jamie Dimon say? Why was Jamie Dimon sitting here wanting to, add all this money, $1 billion for these loan losses. Well, as the Wall Street Journal reported it, JP Morgan CEO Jamie Dimon says powerful forces threaten the U.S. economy. Okay, let's see what CNBC reported. Jamie Dimon sees storm clouds ahead for the U.S. economy. Well, that doesn't sound very good. It wasn't. Let's read what he said. So he essentially says that he thinks as the Federal Reserve is going to accidentally tip the U.S. into a recession as it combats the rising inflation. So essentially said this is a risk that the Federal Reserve is going to cause a recession. Now, he thinks it might be accidental. There's other people who are saying they could do it on purpose. But Jamie Dimon, the reason people listen to him is he is so good at predictions, right? Jamie Dimon is really good. In the past, when he has predicted the markets and things, he's gotten it right. He has absolutely been spot on. He's gotten it right. So that's why when we hear about Jamie Dimon making future predictions, we listen. And when Jamie Dimon says it's going to be bad, there's storm clouds, there's severe economic problems ahead, he thinks the Federal Reserve is going to cause a recession, it's time to listen up. So the problem with investing in banking stocks is normally when the Fed raises interest rates, banking stocks are going to rise significantly because they make a lot of money off of the higher interest rates. However, normally when the Fed is raising interest rates, they're doing it because the economy is doing great and there's no problems in the future and they can just go ahead and raise rates. That is not the case this time. In this particular situation, the Fed is raising interest rates because of the same situation we had in the early 1970s, in that inflation is rising. And so the Fed is forced to raise interest rates because the inflation is rising. They're raising interest rates to fight inflation. Yes, the economy is doing well right now, but that's not why they're raising interest rates. They're raising interest rates to fight inflation. So that's the problem with investing in banking stocks right now, is the rising inflation is actually doing more harm and more damage than the benefit of the rising interest rates. And that's why we're seeing banking stocks drop. That's after Jamie Dimon came out and said this today. I actually sold my FAS position again because I realized that banks are not going to do well. They're probably going to continue to struggle, and they're probably going to continue to go down in price despite the fact that interest rates are rising, because inflation is going to hurt these banks more than rising interest rates. So now let's get back into the article here and do a little more details on what he's really saying. So he said, I'm simply pointing out that those are storm clouds on the horizon that may disappear, they may not. He's basically saying, these are the risks that we see ahead. We are preparing for these risks so that we don't end up in the same situation we were in 2008 when we were over leveraged and completely unprepared. He said, this time we're going to get ahead. We're going to get prepared. We're going to set cash aside. We're going to get rid of our risky investments, and we're going to be ready for a downside in the market. A downside may or may not come, but if it does, we are ready. That's what he's saying. He says, in the event a recession does develop, the bank would have to put up a lot more for loan loss reserves. In other words, the $1 billion they put up this quarter was just the start. They're going to have to start adding a lot more as the months go on in order to prepare for a possible recession, because during recession, he sees a lot of loans going into default. Now, what kind of loans are we talking about here? We're talking about mortgages. We're talking about personal loans. And yes, we're even talking about bonds where companies and governments may not be able to pay their loans. We saw that in the 2008 financial recession, and Jamie Dimon is predicting that it may happen again now here. So that's what's going on, okay? So let's come on down here and see what else we've got. So he, again, this is CEO of the biggest bank by assets. He said economic growth will continue at least through the second and third quarters of this year. So in other words, what he's saying is that the economy should remain strong for at least another 6 months. And that's going to be fueled by consumers and businesses flush with cash and being able to pay their debts on time. So, in other words, once the consumers and once the businesses are out of this extra cash reserves that they stored up from the pandemic, they're going to have trouble paying their bills. And that's what he's predicting. Now, he says after 6 months from now, very hard to predict. He says you've got two very large countervailing factors. And essentially, he's saying there's two things that could cause things to go up, could cause things to go down. And those are inflation and quantitative tightening, or the Federal Reserve buying back their bonds. And he's saying that this is all a problem in the future. Okay, we don't have to go into all the details on this, but essentially what he's saying is between the war in Ukraine, with the rising inflation, with the Fed raising interest rates, with the Fed buying back bonds, and that's going to cause interest rates to go up even more. All of this is going to lead to major, major problems in the future, starting in about 6 months. And of course, bank stocks have been absolutely hammered despite rising interest rates. And that's because the yield curve inverted this year, which points to a possible recession in the future, as well as rising inflation, causing their losses to exceed their gains. All right, I'm not going to beat that one to death. Let me get into a little bit more. This economist over at the Wall Street Journal said that after a rapid recovery, that is, as we were talking about, the next 6 months, watch out for a sudden slowdown. And he thinks that fiscal and monetary policy reverses, that is, the rising interest rates, as well as gasoline prices, all this eating into spending power. This could cause growth to slow down abruptly. So just a lot of warnings coming out today. And then the Federal Reserve's board member, Christopher Waller, said that he expects interest rates to rise considerably over the next several months. And he sees multiple half-point interest rate hikes. In other words, rather than the normal 25 basis point rate hike that everybody's been talking about, he sees not just one in May, but multiple 50 basis point rate hikes over the next few months. So again, that is going to put more downward pressure on the stock market, especially the NASDAQ. And as far as where people see interest rates coming in May, essentially we are at an 89% chance of a 50 basis point rate hike and only an 11% chance of the 25 basis point rate hike. So pretty much everybody is pricing in a 50 basis point rate hike on the May meeting, which is coming up in 20 days from today. Okay, that is all of the news that I wanted to go over. The next thing that I want to do for you guys is let's go ahead and let's cover just some quick technical analysis on the markets, and I'll go ahead and get that set up real fast. Let me just log into a few accounts here, and we'll go over the technicals, kind of show you where I think that things are going to go over the next, say, few weeks, few months, and especially next week. So let's see. I'm gonna do that, and then that, and that. Okay, let's go ahead and get this pulled up, and there we go. Okay, so let's just start with Twitter real fast, because this is a stock that we're pretty heavily invested in. And Twitter right now, obviously, it was up pretty significantly today. It was up 3% on the day. But if you look at the daily chart, we are still well within this bearish trend. And if you look at the MACD here, it looks like probably on Monday, this is going to have a death cross, which is just going to confirm that bearishness. And I'm still looking for this gap here to be filled. So we had a major gap last week, and I'm still looking for that to get filled, for TWTR to get down to around $41. And so I still think this is going to bottom out at around $41 next week. Although I do want to point out that we are going to hit some pretty strong support here at $42. So $41, $42 next week. That's what I'm looking at. And then as far as the markets overall, I'm going to pull up the QQQ. Again, this is the one that I've done the most analysis on. So we'll just go ahead and use this one for our market analysis. And what you're going to notice here on QQQ is The white lines are our Fibonacci retracement levels. Now, yesterday I predicted that we would bounce off of the 23.6% Fibonacci retracement level and go up on Wednesday. Obviously, we did in a major way. We're up 2% on Wednesday. Uh, but now we just closed at another support level, or another resistance level, rather. And that resistance level is the 300-day EMA. So if you just look at the EMAs, if you were to, eliminate all the drawings here, you would see that the QQQ, which is a NASDAQ 100 ETF, is still below all of the EMAs, which is extremely bearish. So the NASDAQ, based upon the EMAs, the MACD, and the RSI, is still extremely bearish. It could still go down. However, if for some reason earnings are really good tomorrow and this breaks above the 300-day EMA, then we're going to start getting a nice rise in the RSI. We're going to get a rebound on the MACD histogram. And we could actually literally in one day go from all bearish signals to some very early signs of some bullish indicators on the NASDAQ. So right now, as it closed today, the NASDAQ has zero indication on what it's going to do on Thursday. I think that's probably why the futures right now are literally flat, because nobody has a clue what's going to happen on Thursday. So we're going to have to watch out for that. And just to give you an idea on what earnings are coming up on Thursday, we got TSMC, which is Taiwan Semiconductor. That's going to be pretty important to really listen to the earnings call, try to get some idea on some supply chain issues that we might be facing over the next few months. And then it's the banks again: Wells Fargo, Goldman Sachs, Citigroup, Morgan Stanley, just Ally, PNC. It's all about the banks on Thursday. So tomorrow morning, before the markets open, we're really going to have to watch these bank earnings. Those are going to move the markets. Now, the other thing I just did want to let you know about before we start getting into our stock picks that I want to talk to you guys about. The last thing is just to remind you all that here in 2022, Friday, April 15th is Good Friday. The markets are closed. So Thursday is going to be the last trading day this week. The markets are closed on Friday and they will reopen on Monday. Okay, that is everything that I had for you guys. What I'm going to do now is I'm going to go through your comments and I'm going to just read through your comments. We'll see, what stocks you guys want to talk about. And then whatever we end up with as far as things that more than one person is talking about, more than one person has requested, those are the ones that I'm going to go ahead and do some technical analysis on. If you're watching a replay and you just wanted the market news, we're done with that segment. You can go ahead and leave. If you guys want to stick around for the stock picks and the technical analysis on your stocks, then we will go ahead and do that now. Okay, let's take a look. And trying to see what you guys had maybe talked about or whatnot. Let's see. All right, let's talk about this one. This is ATER. And the reason that I'm gonna bring this up, let me show you guys. Where is it? So, yes. So ATER showed up on our list a couple of times today. Let me bring over the Discord and I'll show you guys what I'm seeing here. There we go. Okay, so how I initially saw ATER today and kind of got on my radar, if you will, is we noticed in our alerts in the Discord that ATER was the third most active stock today with 18 million in volume. And so obviously that caught my list. I think it was a couple of days ago, I saw ATR was not only part of those, but yeah, it was also the top gainer on Tuesday with a 23% gain. So, or one of the top gainers. VERU was the top gainer. So let's go ahead and talk about ATER because I think this is a good one to discuss. And let's go ahead and pull that up here. All right, let's see what's going on with it. Let's start and see if we can find any news. So, okay. So it's basically, it just looks like retail buying in the hopes of causing a short squeeze. That's all this is. So the problem that I have with these retail buying stocks, these short squeeze potentials, is that you literally have no idea what's going to happen. You just don't know. Like you never know when retail investors are going to get tired of it and just dump. The problem with speculation is everybody's buying in the hopes of selling it to some greater fool in the future. And that works until there's no more fools left and the stock just tanks. So the one thing we'll look at here is the short interest to see how it actually looks, whether this is actually possible for a short squeeze or not. And outside of that, as far as any predictions on what happens in the short term, you literally cannot predict. So ATER, we'll go ahead and pull that up. And I think that's the guy right there. Let's go over to our short information. Let's just go ahead and go to utilization, which is always very helpful. And we are maxed out at 100%. We have been maxed out 100% since March 9th. That's pretty impressive. That's over a month. So now we got that. Now that we know that, let's see if a short squeeze is possible. What we're going to do is we're going to go to the average age on loan. This will tell us how many days on average it's been on loan. And we have 30 days average on loan. So what we're going to do now is we are going to go to about a month back. And let's see what we've got for about 1 month back on ATER, what price it was trading at that time. So let's see, today is, let's see, 13th. So we'll go back to about March 12, 13, somewhere in there. So somewhere in here, it was trading at around $2.50. Okay, so anytime, so the average price that people shorted their stock at was around $2.50. It's currently $5.60, which means short sellers are on average are down 100% right now. So the next thing I want to do is I want to go see if we can find any signs of any sort of manipulation. There can obviously be signals of it, even if it's not obvious. So let's go ahead and start with the short interest over here on Fintel. So this is one thing. So Fintel does a short squeeze score, and I'll try to make this a little bigger for you guys. So Fintel's short squeeze score has this at 99.5, which is the number one stock out of all 5,000 stocks with short squeeze potential. Okay, so that seems pretty good. Gamma squeeze score, number 2 out of all the stocks. I do see that there were no shares left available to borrow. I mean, 5,000, 15,000, it's essentially zero. So that lines up with the Ortex numbers. Short rate borrow fees are 109%. That's good. That means that people will not want to reshort because they would have to double their money in order to make up for it. So the next thing I really want to see, which is going to be really, really important, is, okay, well, this is interesting. We're at 53% short volume ratio, even though we're at 100% utilization, meaning you can't short the stock anymore. And yet 53% of the volume was shorting. So this is our very first sign that we do have manipulation on this stock. How can 53% of the volume be shorted when there's no shares left available to short? So definitely manipulation showing up there. Let's go take a look at our feelers to deliver. And while they're not extremely high, they were only, 139,000. That is certainly a pretty significant jump. And, this only goes back to March 14th. We should get the updated numbers for the last 2 weeks in about 2 days here. So we'll have to see what it was. I would not be surprised to see it over 1 million at that point, but we're definitely seeing signs of manipulation in the fails to deliver. We're seeing significant signs of manipulation in the volume. So yeah, all signs, I would have to agree that this definitely does have some significant short squeeze potential. So retail traders are absolutely right on this one. This has excellent short squeeze potential. This is another one of your AMC, GME type situations. Will retail traders win, or will short sellers hold out? That is the question. But short squeeze potential, yeah, it is probably the best chance of the short squeeze potential right now today. All right. Veru is the other one that I saw on the Discord that had jumped up. Veru, if I'm not mistaken, was where's our most active? Yeah. So Veru is number one most active yesterday, and then or on Tuesday, and then it was the number two most active on Wednesday with 110 million shares traded. Holy smokes. Let's go ahead and take a look at the chart, see what's going on with that. Guys, I really appreciate you all joining. I love doing these live streams and chatting with you guys. It's great. I love it. So I've got some orange support resistance lines here, which are pretty old, as you can see. And I also see that we hit that and stopped. So let's go see what's going on. Where were these drawn? Because, oh, wow. Okay. So if we go back to the year ago, back when everything was running up insanely, we were able to draw some support and resistance levels about a year ago. So I must have drawn these lines last year. And we had numerous touch points on both of these. And here we are over a year later, hitting the exact same support and resistance levels. So this $14.50 point is going to remain very strong resistance. If Veru breaks above it, which so far it has after hours, this thing is going to skyrocket. We could get all the way back up to where we were before at $25. I don't really see any more resistance until about $15.85. So $15.85, we got resistance, and after that, $25. Okay, let's see what's going on with that. Let's go check our news first. Why? What's going on? On Monday, Veru announced the results for its phase 3 study of its COVID-19 drug, which showed the drug cut deaths of 55% of hospitalized patients for this acute respiratory syndrome. Wow. All right, if they're going to file an emergency use authorization application, they could get this approval within 1 to 3 months. Wow, that's crazy. So let's see. So HC, let's pull up tip ranks and see what we got for our ratings on here. And Veru. So when you're dealing with pharmaceutical stocks, the tip ranks ratings, their price targets, basically they only matter if they get good results from their trials. And obviously Veru did get good results from its trials. So what is the average analyst price target? $29 from all analysts. Let's go to top analysts. We don't have enough. Okay. $29 is the average analyst price target. That's a 100% upside potential. And the most recent one from 2 days ago, we had a 24 and a 36. And then, of course, a bunch from 3 days ago, because all of these are recent because that's when they had their great results. So $29, that's what it looks like Veru could get up to. Certainly that would be pretty close to where it hit that high at a year ago when it was at, what was it back here? It was at 25. So 29. Yeah, this is legit. This is definitely a legit a stock to buy into with a ton of upside potential. If you're patient, it looks like this could be a double up. just based upon tip ranks and what we're seeing. Let's go see if that double up might get accelerated by shorts. VERU. All right, 43% utilization. That's pretty high. Let's see. Utilization. Oops, wrong one. Oh, wow. Okay, so as we get real legitimate news with real analysts saying this thing is going to double in price from here, what do short sellers do? Well, they load up. Of course they do. Look at the utilization. It's all flat down here around 16, 17%, and then poof, skyrockets. So this is going to be interesting. On one hand, we have real legitimate news that says the stock is going to double. On the other hand, you got short sellers, which are going to try to push this thing down hard. All right, my prediction. My prediction is this run up fizzes out. It falls back down to maybe around $10, maybe lower. And then 1 to 3 months from now, they get their FDA approval and it skyrockets to the 20s. That's what I'm going to predict based upon how I've seen these things play out before. All right, guys, let's see if we can go a little faster here. Those are the two big ones. We got to talk about those. This is by far the most active. Let's see. So my AMC position is still like stupid small. I bought that one share. I haven't bought any more. As far as this public portfolio here, here's my thing with AMC. AMC has got really strong support at $14. Where it's started slowing down right here at around 17, $18. It just does not have that strong a support. It just doesn't. So personally, I still think this is going to get back down to 14 again. Maybe. If it does, this is where I want to add shares again. I want to add shares at 14 again. So yeah, that's where I kind of am with that. Dimon, not Diamond. Jeez. Let's see. You actually might not be that far off as far as the Fed. They've said they don't care about the market. That's what they keep saying, and they may literally cause a recession in order to get this inflation down. So you might not be that wrong. You might actually be right on that one. When it comes to oil at this point, I mean, it's going up and down. Oil definitely has a significant effect on stock prices. There's no doubt about that. But I think right now, for the next 30 days, for the next month, I think earnings are going to be the really big impact on the stock market. I don't think it's going to be oil or the war or inflation. I think it's going to be earnings. I think that's what's going to move the stock market over the next month. So, I don't think oil is going to have that big of an effect. Let's see what else we got. All right. So we've got questions for these two, AMD, NVDA. So AMD, we were actually dollar cost averaging into this in the Discord. I know Coach Steven, this is one of his favorite stocks to buy, and he's been dollar cost averaging in. Now, I love the idea of dollar cost averaging in too, but I also saw that this was a falling knife, and I wouldn't jump in and start trying to buy into it until we see this thing bottom out. The problem is this was a support level. Hopefully you can see that here with all this. This was a very strong support level, and we just crashed right through it. We got a little bit of support down here where we're at right now because I can, see that line back here. So we got a little bit of support where we're at right now. It's weak support, but it is support. We'll see if it can hold up or not. If not, there's your next level right there, $82. We're not even oversold on the RSI. So I have very low confidence that this is bottomed out. Very low confidence. It's possible, but very low confidence. So I would be waiting on that one to just see what's going to happen. But for a long-term dollar cost average in, I think it's a great stock. NVDA is similar, but it looks a lot stronger than AMD. I say similar chart pattern, but the difference here is we are at the 300-day EMA. We did not break below it. So this is really strong signal that it could rebound. We don't have any confirmation of that whatsoever. But as I explained in yesterday's video, when stocks rebound, they typically rebound off of support levels. And NVDA is at a support level, unlike AMD. So NVDA has a much better chance of rebounding than AMD does. But I do want to stress there is zero confirmation of a rebound so far. Again, another stock that I would love dollar cost averaging into, but not one that I would load up on yet. All right, let's see if there's any others people are asking about more than once. ATER, we've already talked about. Let's see. Wow, you guys are all over the place. All right, let's talk about T real fast because I know this was a question brought up in the Discord and it confused a lot of people. So let's kind of go through this and explain this. So this drop here is not a legitimate drop. It's going to be a little hard to explain, but let me see if I can. Let me just pull up the whiteboard because maybe this will help. It's hard to say, but AT&T is actually up from that drop. It didn't actually drop. So essentially, what happened is this. So you had your one share of T, and it was trading at around $24. Okay. What AT&T did is they decided to spin off their Warner Brothers brand. And when they spun it off, they decided to pay out the spinoff in the form of a dividend. So what used to be one share of T is now one share of T at around $18 plus 0.24 shares of WBD, and I think right now there's a WV. The WV is a temporary ticker that's going to drop in some time here. I don't know when. Wow, there we go. Okay, so WBD, WV, and let me see. I can't remember what that was trading at. It was WBD, WV. Oh, no, it is WBD now. Okay, never mind. So call it $26. So now what I want to do is, so it's already dropped the WV, and that's $26. Now, if I do some math on that real fast, 26 times 0.24, 624. And then if we add the $18 that the T is worth, plus the $6.24 the WBD is worth, we end up with, what was that, $24.24. Okay, and actually T is not 18. Let me just get the exact price on it. So I'm giving you accurate information. Oh, come on, guys, where is it? There we go. Got too many tabs open. 1942. There we go. That makes a lot more sense because I knew we were up. So this is actually 1942. And let me get this math done. This is all going to make sense for you guys. All right, where'd that calculator go? Right here. So now if we do the 1942 plus 624, we end up with 2566. So what happened? Well, last week It was trading as one share of T for around $24. Today, it's trading as one share of T plus 0.24 shares of WBD for a total of $25.66. So a week ago, it was $24. Today, it's $25.66. So you have to understand that T is actually up. It's just that 25% of it is now trading under ticker WBD. And everybody who owned T shares last week got the 0.24 shares of WBD for every one share of T they had. So if they have 100 shares of T, they got 24 shares of WBD and kind of like that. So that's what's happening with T. It's actually up. It's not down. It's up. So this is not a real drop. This is actually a gain because you got to add the WBD shares in order to find the true price of it. Now, the thing is, these are now trading as two separate symbols, right? So T just lowered their dividends because part of their dividend was the WBD shares, and then part of their dividend is this 28 cents rather than their normal dollar whatever. So what's going on with this is this one-time dividend is much, much lower. The big question is, what is the dividend going to be in the future for both T and WBD? Because most people who held T were holding this for their dividends. So what's going to happen in the future? And we don't know. We have no clue what the dividends are going to be in the future. So I have no idea if this is still a good hold for dividends. Nobody does. So that's what we're going to have to watch. And nobody knows. It's very possible that prior like $1.30 dividend, whatever it was, is now going to be like 28 cents on T, and the remaining dollar is going to be part of WBD. I don't know, but it's possible. More than likely, the dividend now gets split between those two companies. So if you want the same holding that you used to have for dividends, and you still want the full dividend in the future, you have to hold on to the WBD shares and the T shares because those collectively make the original company. Okay, let's move on. Let's see. TOBAF, I actually looked at this one earlier today because I was getting a little concerned about it. We bought this up here, guys, when it was like $2.50, $3. I mean, we bought this. What do we buy? Back over here? Yeah, when it was rebounding, we bought it right in here around $3, somewhere in there. So what do we got right now? We're at 98 cents. It's literally a falling knife. There is 71 cents, 72 cents is the next support level. So it could keep dropping and dropping. I'll let you know I haven't sold any yet because I still believe in the company long term. And I didn't have a very big position in it anyway, so I didn't really care. But the issue with this, the big issue, is that they are having troubles financially. When we invested in this, what I saw was $129,000 in revenue, $563,000 in revenue, $1 million in revenue. Holy smokes, this thing is growing like crazy. Buy. Oh crap, $300,000 in revenue. What the heck? Why were we growing, and all of a sudden revenue just tanked? This is why the stock's going down. This is not like being manipulated. This legitimately should have tanked because revenues tanked. This is bad. This is really bad for the stock. So I'm still holding out hope that they can get their revenues turned around. But if they can't, this is going to be a loser. All right, that's what's going on with that. Let's see what else we got. Anybody else? I'm trying to find some that you guys are. Yeah, I already covered ATER. Just go ahead and rewatch the video when you're done. We can get to that. Okay, so we got a couple of requests for MULN. Let's do that guy. Mullen Automotive. Oh, yes, that's right. The short squeeze potential stock that fizzled. Okay, what we've drawn here is a Fibonacci retracement chart. And it shows how high up this might go. Unfortunately, we hit the bottom rung and failed to get any higher. So it can't even get above its first resistance level. That is not good. This stock, it had really good potential back here, but it just did not have enough retail momentum to carry it forward. Unfortunately, that's what happened. So, unfortunately, I mean, unless retail traders decide to jump back in, this thing is dead. When you're playing these short squeeze like chance stocks, I mean, these are all about speculation, which means you should only be holding these for a few days. I mean, I'm sorry for anybody who listened to YouTubers over the past year who said all this stuff about hodl and never sell and all this other lies. Look, when you're dealing with a stock like this, get in, get out. That's it. Don't hold, because it will come back down at some point. It always does. Now, obviously, there are exceptions, right? So if you have like AMC or GME and you're buying those not to make money, but you're buying those just to hurt short sellers, a revenge stock, right? That's basically what those are, revenge stocks. That's a completely different story, right? But understand, you're probably not going to make money. Like, you're just buying and buying and buying and buying and buying. Yeah, you're going to hurt short sellers, but you may never make money on that, right? There's a chance. Now, obviously, AMC and GME are both using all the extra cash they have to shore up their balance sheets and significantly improve their fundamental status. So long term, it may work out, and I hope it does. But just understand that when you get these short squeeze potentials, get in, get out, take your profits, don't stick around, because you will lose money if you hold. Okay, let's see what else we got. Okay, we'll talk about Apple real fast. I mean, it kind of goes along with the overall market as far as like S&P or NASDAQ. As you can see on Apple, it did just follow the market, dropped, rebounded today. And then tomorrow is a big guess because it's, again, right at resistance. The one thing about Apple that's different from a lot of other large mega cap stocks that make up the S&P and the NASDAQ is Apple has not yet had that major fall that pretty much every other mega stock cap has had. Apple is still holding its strength really strong. And I am concerned that Apple needs to have a pullback, that it's going to fall at some point. And that's my concern. I'm very concerned about that. Obviously, we had a major run up of price. A lot of that was justified, but I don't know if this forward PE ratio of 27 is justified when the economy is slowing down. Their manufacturers in China are shutting down, and we have a chance of entering recession. I just don't think that's justified. I think this needs to have a pullback for a little while and take a little bit of a breather before it has its next run up. I think we need to get down to like this level, right around like 135 or so, before we continue higher. So that's my thoughts on Apple. Let's see what else we got. All right, a couple of requests for GLDG. Let's go take a look at that one. So as you guys know, GLDG is one of those stocks that I own in a couple of different accounts, including that $1 million challenge portfolio. So I own this in a number of different accounts. The last time the Fed raised interest rates, this skyrocketed multiple hundreds of percents, but it took time, right? It didn't happen right away. So far, we remain up on this. Obviously, I'd like to see it back in that $2 range, but we'll see. Right now, it looks good. As we start to get more and more signs of a recession, as more and more money starts getting pulled out of the bond market, and as it stops getting put into stocks, right now it's still getting put into stocks, but as the money gets pulled out of the bond market and stops going into stocks, it'll work its way over into gold. And as it does, GLDG will continue to rise up. So I love this stock long term. I continue to hold it. And like I said, I got it in multiple portfolios. All right. Let's see if there's any others more than one person's talking about. Here we go. PYPL. Let's go for it. PYP. I can't spell. PYPL. Did I type it? Good. Okay. Well, that doesn't look good. Yikes. All right, just technicals. This is 100% bearish. It is below all of the EMAs. It has got a death cross in the MACD. It's dropping on the RSI. Ugly, ugly, ugly. There is a 99% chance this is going to get back down to $95. Let's see. Forward PE of 22. Not as bad as it was when it was way the heck up at 300, but still a little high when you're going into a recession with rising interest rates. So I am obviously short term. This is very bearish. Longer term on the monthly chart. Okay, I'm very encouraged to see that we have some very strong support in this little range here around 80, was it 86 to 90? Let's go back over the daily, 86 to 95. So we have very strong support between 86 and 95. There is a very good chance that PYPL will bottom out somewhere between 86 and 95 and then start going back up again. So while it is bearish in the short term, it does appear to be very close to bottoming out. Okay, let's see what else we got. Trying to find others more than one person talked about. Let's see. It's a good question. So just channel-wise, do you still watch other YouTubers to give us a summary or not anymore? Okay, guys, we got 8 minutes left. I'm not going to do any more stocks. Let's just talk. Let's talk about the channel. Let's talk about business. Let's talk about success in life. Your question, do you still watch other YouTubers to give a summary or not? Yes, I still watch other YouTubers. I would love to give you summaries on their stock picks. No YouTuber is giving stock picks in 3 months for the most part. I mean, maybe one video a month or something. Why are no YouTubers giving stock picks? Because the market's going down. I don't want to be buying stocks if the market's going down. I want to be holding cash, want to be waiting for those good investment opportunities, not buying stocks that we know are going to go down. So yeah, I once this whole recession thing is over, we're going to get back into the stock picks. Now, believe it or not, a lot of the market updates I've been giving to you are summaries of other YouTubers. Like we're all talking about the same thing right now. Just trying to figure out what's going to happen, where it's going to bottom out. So the answer is yes, but right now, no, because they're just not giving any. Okay. All right, let's see what else. Okay, I don't want to cover any stock. Here's what I want to do. We got about 6 minutes left. Ask me a question about making money. Ask me a question about business. Ask me a question about YouTube. I want to talk about this stuff because I want to get another channel started on how to kind of make money and get some other sources of income, kind of quit your jobs. So maybe you can just get that financial freedom for your family. But I'm curious what you guys want to learn. So please, somebody ask me a question about business, money, YouTube, whatever. And we'll wrap it up with that. Yep. Okay, just general advice for options. Options should be for trading, unless you're doing leaps. I don't recommend using options at all unless you have experience. And if you don't have experience, I'd recommend taking some classes and courses and then maybe going through and paper trading and learning before you start using any real money. Let's see. All right, here we go. Here's a great question. How did you grow such a large audience so quickly on social media? That is a loaded question. That is something that I really want to do a video on in the future. I'm actually going to FinCon in September, and I've applied to speak on this topic because I know a lot of people are interested. I mean, I hit 1,000 subscribers in 10 days, got the channel monetized in less than a month. Now, a lot of that, honestly, was not me. I mean, I give all the glory to God that I got in on YouTube at the right time, because back in that time, January, February of 2020, when I started this, or 2021, last year, when I started this channel, there were a ton of new investors jumping in, doing, getting on stocks, learning, and it was like literally the best time to start a channel. So it was just a blessing from God that I jumped in at the time that I did. I can't give myself a lot of credit for it, even though there was a lot that I did to grow the channel. But really, it was just timing. It was the perfect timing. All right. How do I do my taxes? I hand all my papers to my accountant and ask him how much I owe. That's literally how I do my taxes. How's the family going? Great. Everybody is doing wonderful. We're healthy. We're happy. Everybody's doing wonderful. So thank you for asking. Let's see. You said it's a little stressful with so many YouTubers feeling confused about the markets. Yeah, I get it. If this is your first bear market, it is stressful. I mean, I was freaking out in 2000. I don't have any YouTubers or anybody to tell me what was going on. I had to figure all this stuff out on my own. And, luckily, thank God, I was working for Merrill Lynch during the 2008 financial recession. So I had a lot of insight and a lot of real expertise to kind of guide me through it. And honestly, it was working at Merrill Lynch during the 2008 recession that I learned to remove my emotions from the market, because you're dealing with trillions of dollars of bank money. And it's just like, all right, we bought a stock for $1 trillion, whatever, lost $100 million in that trade, whatever. I just learned to remove all emotion from the stock market. At that point, it was just, hunker down, do the work. So all I can say is your first recession is going to be stressful. There's no getting through it. Just try to take the time to learn, and hopefully the next one is easier. All right. Okay, here we go. So you started a channel. Any tips? One thing I'd say is be entertaining. I see so many YouTubers with amazing content that are super smart, and they're so boring. They just talk so monotone. It's like, today we're going to talk about the Twitter stock that went up 2%. Let's go take a look at the charts. It's like, dude, nobody wants to watch you. You could be the best analyst in the world. Nobody wants to watch you. So the biggest tip I have for you is be entertaining and don't be monotone. Let's see. Thank you for your very kind words. I really appreciate it. What are my personal goals for net worth? Great question. My personal goal for net worth is to have enough to be able to live off of the residual income while still giving away a ton of money. So $10 million is my current goal. My short-term goal is to get to $1 million. I'm not yet a millionaire, but I'm well on my way. So short-term is to get to $1 million, and then hopefully within, I don't know how many years, but I hear that once you make your first $1 million, making your second is really easy. Most people, from what I hear, it takes them from the time they get started about 10 years to make their first 1 million, and then another 10 years to make their first 10 million. So I guess my goal would be to get to $10 million within 10 years. Okay, examples of alternative or passive incomes. This, for most people today, this is starting some sort of side hustle. The easiest way by far is to do some sort of service. So if you know how to design websites, go on Fiverr, create an account, or go on Upwork, create an account. If you know how to handle social media, like especially if you're like a Zoomer or millennial and you're really good at social media, and there's boomers that run companies that need help with their social media. They're trying to get on Twitter and they're trying to get it cool and hype, like who's the Wendy's? They're trying to be the next Wendy's. If you're really good at social media, go on Fiverr, go on Upwork, go post your success, show them how many followers and subscribers you have, and get work that way. You can go mow lawns. Literally, like any service is by far the easiest way to start a side hustle. Now, for passive incomes, this is very different. Passive incomes, you have to find something that's going to pay you a residual income every month, no matter what. That could come in the form of an MLM, although I'm going to warn you right now that only about 1 in every 1,000 people actually generate a long-term passive income with an MLM. So very, very low chance of that working, but it's possible. Another way is obviously investments. If you were to buy dividend stocks, you now have passive income. Same thing with bonds. Bonds create passive income. Another way is you start some sort of business that charges a monthly fee. And ideally, that business charges a monthly fee for a product or service that you personally do not have to be involved in. Okay. So like my Discord would not count because I have to be personally involved. I have to be there to help you guys out. But if you were to create something that you were not personally involved in, maybe you could hire a team of people to run it, that would be passive income. All right, let's see what else we got. Where to go to college? University of Florida. However, I'm going to give a little hint. I don't think I've ever told this to very many people before. I didn't go to college to go to college. I went to college to party. Straight up fact. I didn't care about college. I knew I was going to run businesses when I got out. Could care less about college. The day that I was supposed to graduate, it all came down to one final grade. I had a core class. And the University of Florida at that time, all of your core classes had to be a C or above in order to graduate. And I didn't know if I was going to get a D or a C. I had no clue if I was going to graduate. I literally walked to town hall with my robe on and all, and I flipped through my name in the little book to see if my name was in there. Luckily it was. I ended up graduating with a 2.53. I personally don't believe in college. I mean, it'll help you go get a job, but that's literally the only part of college is to get a job. If you have an interest in business, just get out there and start your business. Let's see what else we got. Okay, let's see. What other business opportunities do I see out there right now? Obviously, there's business opportunities everywhere. 60% of Zoomers run their own business. That is the number one reason why we have a massive labor shortage in the United States right now, and why nobody wants to work is because they're all running their own business. So there are opportunities everywhere. In order to find out where an opportunity is, all you have to do, it's really simple. All you have to do is answer this question. What problem can I solve that people will pay me for? That's it. You figure out the answer to that question, you will become very wealthy. And that's all there is to it. There are opportunities everywhere, from easily solved that will make you a little bit of money to very difficult problems that will make you a lot of money. And, entrepreneur, I started with the easy problems and worked my way up. So not sure what the first part of this question was, but do you analyze stock on a YouTube page? Do you have help like employees? So I don't personally hire employees, but I have a lot of independent contractors, people that I've hired that are other companies, people on Fiverr, people on Upwork. I hire these people to help me out. So while I don't have any employees, I do have a lot of people that I hire. I don't employ them, but I hire them. Yeah, that's one thing about business is you try to do everything by yourself and you're not going to get very far. You have to get people to help you out. You have to delegate the tasks that you're not good at and stick with the tasks that you are good at. Let's see what else we got here. How much money did you start your journey with? Not sure what you mean by start, but I'll put it to you this way. 10 years ago, I was homeless. I had not a single penny to my name. We had $250,000 in debt. So how much did I start with? Negative $250,000. All right, let's see what else we got. Yeah, I agree. I agree with Richard, man. Juan, you're great. You're awesome. You're not monotone at all. Yeah, let's get together. Let's do more videos together. Love doing videos with you. Yeah, man, go Gators. Let's see what else we got. Do you host a conference we all attend to learn from you in person? I do coaching calls every week in the VIP Discord. If you guys want to join those coaching calls and learn how to trade, where's my link for it? There we go. Stockcurry.vip/VIP. Just go to that link, sign up, and you can join us in our coaching calls. Yeah, absolutely. Let's see. Would love to hear the whole story, how you went from, okay, yeah, the whole story would take forever to tell, but I finally recorded it. I don't know. I got to go through it. It's hard for me to tell the story because it's like, how do I say this? I want the story just to be about what happened, like what I did. I want it to be secular so that I'm not turning people off, but I just can't tell the story without realizing how much God and Jesus were there to help me through it all. To give you a quick example, at one point when we had a second apartment, we weren't making enough money to pay our bills. I mean, I was actually working at Morgan Stanley at the time, but even with that job, I mean, it's New York. It's so expensive. So we weren't making enough money to pay our bills and buy food and all that. Yet somehow, every month, we made it. Even though we were like $800 a month short, we somehow made it every single month. And I remember calling a financial advisor at that time. I was like, hey, man, I need help. Like, we can't pay our bills. Like, what do we do? And he goes over my finances and he looks at me. He's like, how are you guys making it? I was like, I don't know. Money just comes in. He's like, oh, so you have extra income. So what's your extra income? I'm like, no, you don't get it. Money comes in. He's like, yeah, okay, that's fine. But where's the money come in from? I was like, I don't know. It just comes in randomly. It's like, what do you mean it comes in randomly? He's like, I don't know. Somebody sends us money for a birthday, or, we get some lawsuit money, or just random money comes in. And I'm like, what are you talking about? I'm like, I don't know, man. God just takes care of the bills every month. We're not doing anything. It just gets taken care of. And his financial advisor throws his arms up in the air and goes, I can't help you. Have a nice day. And that's kind of how it went. So, I mean, man, it's a crazy story. I'm still trying to figure out the best way to tell it, but yeah. Okay, let's see what else we got here, man. All right. All right, man. I think we're done here, guys. You guys have a great day. It was really fun hanging out with you. Just remember the markets are closed on Friday. So I'm going to see you guys on Monday. If you stuck around this long, please don't forget to hit that like button and subscribe. And of course, if you're on YouTube, go ahead and click the bell icon, click all so that you can get notified when I release my next video. If you're on Twitter, go ahead and follow the page. It was great hanging out with you guys today. Thank you guys so much. And hopefully we can do more of these in the future. So have a great time, guys. We'll see you on Monday.